Good evening, all traders and investors, and welcome to the Nightly Market Intelligence Report and a special alert on a new event that has happened within the U.S. major markets. This is Jeff Kilian, Chief Market Strategist for the Inside Technician, reporting into all of you tonight, 12/23/2012. The time is approximately 7:06 p.m. Eastern Standard Time. Last Friday's session between futures and equities has indicated, as we see it now, that there is high probabilities for the U.S. markets to be selling off in the near-term future. It is either that or it is a classic shakeout here to the downside of a very large nature before prices will begin to continue to move to the upside. But right now it appears that the overall bias is more than likely a sell-off. The large infusion of volume that came in here on the equities using the Dow as the proxy to talk about the current state of the U.S. markets and the real probabilities for future directional price movement has clearly indicated, with the Friday's session down and the probe even down to this level here as hammered out by the open of 1217 at around 13,135. That this is more than likely the level that equities could hit on tomorrow's session. The next level to the downside for support was laid out well in advance on the last report at 13,072, and again the next level to the downside will still stand at 13,026. Very interesting what's happening here in the U.S. markets right now. We have closed below the most recent trading range established between 13,350 and 13,250 that we had laid out on the most recent report. We had also sent out a special alert that the market has now gone. Our market call has put the market in a net neutral position. So for all of you that are long, we want to consider being out of the market for now into money market cash until the market decides exactly what's going to happen, and that's not going to take long to figure out here. This is going to happen very quickly now. Okay, so let's take a look at some of the indicators to help us determine the higher probabilities of future directional price movement coming up here real shortly. If we take a look at the MACD indicator, it is now flattening out, again, confirming the market net neutral position that we have taken. And here, if we take a look at the next chart, what we want to see here is the Chaikin money flow 21 period had an extensive run up here, but now the trend line's been violated here and momentum is to the downside, confirming the downward price movement as being a valid change in direction. If we take a look at the next indicator as compared to the charts, what we can clearly see here is that we have the money flow index 14 period or shorter term after the negative divergence had been established, indicating the pent-up selling pressure within the last two sessions before we had what had happened here on Friday, a clear negative divergence and now full downward momentum, indicating more than likely these prices are going to be selling off very quickly now. Let's take a look at our next indicator that we're going to follow here. The EMAs are just about ready to cross here and should cross on Monday's session. Now this is going to be significant because this will make our smart money bias call roll right into the category of being net short a level 6 strength. Next we want to take a look at the Stochastics Momentum Index, another negative divergence as small as it was compared to prices. However, what we can see here is that we have the official cross to the downside for the second time. So looking at the Dow as a proxy for the overall U.S. markets, it's very clear to see right now how we have arrived at the market net neutral, go to cash, call, and more than likely on tomorrow's session we will be net short and calling it that way on the overall U.S. markets. Let's take a look at some of the sectors we want to run through here right now as compared to as compared to the ETFs that are traded against those sectors. The 50 telecommunication services here, we still have no opportunity. We did have a very small amount of volume that's come in. So tonight on the ETF symbol XTL traded against 50 telecommunication services, we have no call. But we may be short on the AM session, and we'll report that again on tomorrow night's nightly market intelligence report. If we take a look at the 45 information technology sector, the ETF symbol traded against it will be XLK. This sector has an entirely different story written out for us here. A lot of smart monies come in here, almost an historical volume spike on Friday's session again. And it looks like because we got in here long and we made the call, that we could reverse that call and we could be selling out of this ETF tomorrow. A lot has changed, traders. The sell-off that came that we'll see on the futures as we go into the continuous contracts after this, we'll be able to determine, okay, very soon why these have turned around as they all related to an fundamental event that would broadcast it out, and the insiders went ahead and acted on that information to be able to allow the markets to change from one direction to another. We could be out of this again tomorrow, 12:23. Very quick, a lot of smart money in here. Let's take a look at the next, and here we are as of Friday's close, up 8.6 points and counting. It's very possible we may be out of this as well. We're going to have a lot of selling going on if this is in fact what we believe it is right now, because we're not going to give any money back. Let's take a look at the next sector, and what we do have is a high probability short bias call for tomorrow on the AM session on the ETF symbol XLV traded against 35 healthcare. Great setup, penetrated here, a sure level that prices had gotten magnetized to right around the 479 area that had acted as superior support, now closed, and the probe is much lower than that. So more than likely we'll be short on this tomorrow. Let's take a look at the next, and we believe that we have absolutely positively arrived at the right time. We had called this sector short, consumer staples, and we had talked about this on the report. I remember specifically on the 19th saying that if the market does top out, because the indicators were in largely all of their overbought territories, and consumer staples was the first to hit the downside, that we would catch it running, and we have. In here on the 19th, this is where prices had closed, 380.72 on Friday's session. And again, we're still long tonight. This can be an excellent trade for us. Let's take a look at the ETF symbol that would be traded against the sector we're viewing. That symbol is XLY. We were long, did the right thing. Again, we have no problem with getting out of this position right on the AM session and going short. Cover the long and go short, which would be the preferred thing to do. All of this will play itself out early enough for us to be able to make these decisions as you can, and be able to make these trades and be on the right side of the market and the ETFs. Let's take a look at the very interesting 15 materials. We had huge smart money that came in here. This was no doubt accumulation. We rode this up. We are in the money, 8.25 points as we speak. However, because things have changed in the market, and this volume spike, again, that came in on Friday, could be a sell with a down day, we could very well be out of this, close it out tomorrow, and then look to be short as soon as possible. Let's take a look at the ETF symbol that would be traded against the 10 energy sector we're viewing. We have no call again on this tonight. We're waiting for a trading channel break to the downside. And who knows if we'll get more volume or not. That may be all. But this would not be a preferred setup because of the lack of volume as compared to everything else that we've seen on so many greater opportunities just that we're going through tonight here real quick. Okay, here we went short here, covered the short, went long. Now it's very possible, if this is in fact where prices are going to get, previous resistance right here, and we called this as a price profit target, that we'll cover this long and be short again tomorrow and ride this trade back down. Interesting. In, out, back in, possibly out, and back in to ride it down. An excellent percentage gain we've had on this 55 utility sector, analyzing this in the ETF symbol traded against it, XLU. Just on and on and on. Incredible trade. Next, on the 20 industrials, it appears that this is a sell-off, and these prices right here at this area may be as good as it's going to get. Now, if this happens, okay, and for sure prices are trading down tomorrow, we are definitely going to be out of this ETF symbol XLI traded against the 20 industrial sector that you're seeing right now, because we're not going to give any money back. Worst case scenario is we may make a little bit of money on this one, and who knows, a good short setup again for the future. Okay, so let's get out of those. And let's talk about the continuous contracts and how we're going to analyze those to confirm what we just saw on the Dow. Here we go. The continuous contracts, when we look at the opportunities that are there for us as we go through these to get to really what we want to see. What we do believe is that as superior traders and investors, we can't just look at one market. We need to be looking at several different indexes within the larger picture to be able to determine what the realities are for the real probabilities, these high probability market turning points, so we can be there at the right time at the right place to capitalize on these. Now, as we look at the futures, what happened on Friday, and right after we recorded the report, things got out, and now we had a 50-point drop here. Now, today's session gapped open to the downside and is now trading at 14.1825. Let's take a harder look at this. This also confirms what we're just looking at the equities here. We had a level that was set up here at 14.29 even. Now, that level was not only crossed from above to below, but traded way down, almost 50 points in a session. And this all happened within about a half hour's time. Just an incredible move, but it happened without any real volume at that time. What we were able to ascertain is that it was, in fact, an offshore hedge fund that had first taken the move, and because they were identified as a larger player, a lot of high-frequency trading came in to create the move to the downside. And this is the reason why. Now, prices traded back up and actually closed not too far down. Now, on today's session, as we take a harder look at what's happening here, right, at 14.1825 with a gap down, that clearly indicates a lot of negativity, and that this is the direction that equities will trade in on tomorrow's open session. We called a new market bottom here. Right now, I believe we're in fact calling a new market top right here, and this is going to be it. We had a negative divergence, some up movement from the Chaikin advanced decline oscillator. However, this level is nowhere near as high as this, nor this, after the negative divergence was acted on by the sell-off. Here, if we take a look at the stochastics index, our chief leading scout to confirm these market turning points as being valid and actionable intelligence to be able to trade them, has clearly signaled the cross and now the downward momentum. Here, if we take a look at the EMAs, they are crossing in this session right now. So from the new market bottom that was called here on the report, because futures led the entire market up and the equities had no real volume on the way up and has had the volume come in on Friday's session, and the fact that futures are trading down, they are once again leading the market, but with this time the volume from the equities behind it. This is a switch, and this is again more actual proof of why we as superior traders and investors need to watch more than just one singular index like the Dow. MACD getting ready to cross our official longer term trend following and momentum indicator to give us the final confirmation that this is it. The trend has changed. Here we're taking a look at the check and money flow, trend line cross, the money flow index itself, trend line cross. So this is where we're at, and this is why we have the bias. This is a very special report tonight. This special alert going out to everyone, the entire world. This will be posted on YouTube, because if we are correct, and right now we believe that we are, a major market sell-off is in play. And if that's not the case, it's one of the most severe classic shakeouts in U.S. history before prices move to the upside. Let's get out of this. And let's take a look at some real-time charts. Okay, here was the sell-off. As you can see at this point right here, on this volume spike at 4 and 4 p.m. on the 15-minute charts, there really wasn't any abnormities in volume as compared to this compared to this on a previous session. And this is how we came to the conclusion with our investigation here that this was something that was acted upon by a lot of high-frequency trades generated by algorithms to make this sell-off happen so fast. And here we are in 15 minutes and a half hour, again, on this 15-minute bar alone right here at 8:30 p.m. It opened at 1428, the high was 1428.25, and it slammed right down to the low of 1391 before it rolled back up to close at 1418.25. Just an incredible move, incredible move. So as we look at the most recent session, again, gap down. I was watching this in real time today while I was talking to another trader, commenting on exactly what we're covering tonight. On the overall check and money flow that we follow here on every single report, what I'd like you to see is that on this sell-off here, there really was no evidence that this sell-off was about to happen. The activity of the smart money coming out and coming back in, okay, was nothing abnormal. What we do have is, again, a clear-cut case of a sell-off by a single institution which sparked high-frequency trading. Now, again, what we suggest is by tomorrow night's report, we will have clear levels laid out to the downside, again, on the 15-minute charts as compared to the daily levels, so that you can see these levels if the prices keep trading down, along with a special Fibonacci layout that's unique to us here, to be able to, once again, lay out these price profit targets in advance on the way down when we're trading the S&P mini futures in real time. My pleasure to present to all of you tonight. Very interesting times. Let's be prepared. Let's do the right thing. Let's stay magnetized to studying the U.S. markets every single day so that we can all make the type of returns that we need to make, putting the odds in our favor and walking into the charts just like an inside technician. Good night, everyone. We'll see you tomorrow night on the next Nightly Report.